G'day, my name is Brian Johnston, and I want to first of all introduce you to the concepts of 3 and hedging for US broker accounts and non-US broker accounts. So I want to give you an idea of hedging. This morning I put on the hedge of the famous one, the Euro US dollar, the Great British Pound and the Euro Great British Pound, on that to determine which way we go, buy or sells on this hedge. It was 0 plus above 3, so always if it's 0 plus, the hedge is, the trend is long. It's simple, it's long, therefore if the trend is long, this is what determines me. The hedge of each other is the US dollar, the Euro JPY and the Great British Pound JPY. So which one is the strongest at the moment? The hedge is giving a positive indication that the JPY is the strongest group and the US dollar is the weakest group. Of course, putting on the buy of the 3 and the sell of the 3, we have a very good hedge where the buy is equal to sell. This is due to the fact that following the US dollar, and these are strong US dollar currencies. The US dollar is a moment strong, it's moving up, therefore these are moving down. So the two hedges are the two positions of the slots are the Euro Great British Pound for that group and the US JPY for that group. So when one crosses over into the other, it can be a trend change which affects the 4. It's a pretty simple theory. You need to know a little bit about hedge trading and trends, but at the current time, because the slots are both in the center of the groups, it is showing the way the hedge is going. Secondly, the hedge of these two groups gives you the lowest drawdown ratio. And to give you a quick instant, this was put on at the same time with the reverse, the buys on the Euro and the sells on the Great British Pound. These are both new demos for you to look at and just think of the concepts. In this concept, it's clear to see that the US dollar is still the leading of there, and you notice the drawdown is very acceptable. This is the reverse of the hedge that was put on here. So once again, you can see at any time in regard to each other, and of course this is a bigger hedge volume, you can see it. The theory of the hedge of what we call 0 point is when all the buys, every currency is in buy. This is in a profit. This is market efficiency. Whether it's all in a profit from the shorts or the buys, is showing you market efficiency. It's showing you the current market is stronger in the in these JPY groups than the US dollar group. So later on we'll get into talking about placing trades on and using trend bias, but it's quite clear on these 6, the trend bias on these is the JPY group is making money from the other. So this is put on about 3 hours ago. So it went from loss in the bottom line into profit. Nice, isn't it? When the total of these all go into buy, the profit should be over $1,000 US dollars. But however, the principle we're exploiting is the distances between each currency groups, and we don't care where the majority go, we just follow the loss, profit, loss group. I'm using this purely as a demonstration for you of the profit and loss groups. Okay, we have here, we're in a position where the anchor currencies is at the lowest of the US dollar group, and it's the highest of the JPY group. These are the anchors of these 6 currencies. So I want you to think in depth of anchor trading and using the 0 of the 1, and in our group, I can't show it to you at the moment, you can see that these 3 are the group 1 of, on the boys' dashboard. Some questions were asked on the dashboard how you use a dashboard. Well, whenever it goes down to 0, then bounces back up to plus over 3, the trend is long for that group. As these 3 are a counter to that group, in other words, this is a correlation, using correlation currencies to generate profit. The problem always is, how do you identify the trend of these 3? And generally these trend of these 3 eventually pull the whole lot of currencies into profit. This is like 101's core anchors on this is here, as these 2 here are the core anchors of these currencies. This Euro Great British Pound ties those 2 together. The US dollar JPY also helps identify the JPY group. So this is how I do the correlation between the 3. Quite often these 2 can go into profit together. The best correlation, of course, is before the rollover and swap and the times of trade. Obviously at the moment we're looking at the Great British Pound JPY, and if we were doing a trade just on this alone using trade bias, obviously this is the currency in this group that this is the currency Euro JPY, and these 3 have strong trade bias to the sell side at this stage. So obviously if we were putting on a trade of a sell, because sell is the strongest trade on these currencies here, we would we would order 1 sell. I don't want to do this at this stage until we introduce a few other things. But first of all, I want to keep harping on this system here of loss, profit, loss. It's a continuous circle, and you can see that continuing circle will mean some of these currencies will go into profit. And as the 3-1 is a perfect hedge, you notice the Great British Pound is dropping down, but on here on the slot, so you have a different ratio. Also, it's smaller positions. But for this exercise, we'll go back into here, and this is putting a trade on using the reason this is more successful is this was the way the trades were going. We put it on the plus, but we had the correlation, so if it turned around we could pick up the JPY group. That is correlation trading, using the anchor currencies, the 0 on the dashboard to place your correlation trade. So in either way, if the US dollar group goes up, you make a profit. If the JPY group go into short, you can make a profit. So either way, you're sort of covering your bets for an each way trade. This is correlation trade. What you would do, this got up to about $800 profit after 1.5 hours. It's dropping back again. I'm leaving it on. The theory is that when the 5 or 4 go into profit, you liquidate the whole lot and re-put on the exact trade again based on the 0 plus. Okay, that's just a quick short explanation of anchors. Once again, the anchor currencies in these have a relation to JPY, and on that group they have in relationship to each other. Here the euro and the Great British Pound. It's using the offsets and the inefficiencies of all the trades, and it's accounting for market inefficiency trading. That's about all for now, and the next episode will be trend bias, but I've said at the current stage you have to look which way the bias is going. The bias is still going in the sell bias, so the sell trades would be on. That's all for now from Brian, and using a simple 3 currency hedge, buys against the sells. Showing you the anchors. Always watch the volatility of the movement. It'll speed up or slow down. Watch the anchor positions, swap positions is a clue to the change of the market. If the euro dollar, Great British Pound starts to rise or it falls over. At the moment it's still in a buy position, it's still in this buy zone. It hasn't moved. If it moves up, it's making less profit, and if it moves down into profit, it's changed over. If the euro Great British Pound changes over the slot positions, it's time to look at change. Okay, that's just a very first basic introduction to the 3. The 3 is a famous 3 where at any time that the 3 goes into profit, all of them go into profit, you just simply take the profit. This trade is a hedge trade using other currencies as a hedge, where in non-US brokers you can hedge with the same currency. Okay, that's basic lesson 1 on simple hedge using the most powerful hedge, the euro US dollar, the Great British Pound US dollar, and the euro Great British Pound, using their indication. If it was short, these would be buys and these would be sells. Bye for now from Brian. God bless.